Holy cow. So the trade war is escalating. It appears Trump is now threatening to put on an additional 50% tariffs on China. We have to talk about a potential Ethereum reversal and the Fed emergency funds rate meeting today. So let's go ahead and dive in here. So first thing, Trump had tweeted this out. So yesterday, China had issued retaliatory tariffs of 34%. Now, in response to this, Trump said, hey, if you guys have until April 8th, tomorrow, to remove those 34% retaliatory tariffs and come to the negotiations table, or we're going to slap on another 50% tariff. So that would bring the total tariff for China up to 125%. And this is really crippling for both economies. This is not good. Like, this is not something we want to drag out. I know there's people out there like Anthony Pompliano saying, tariffs don't cause inflation, but yes, they do, especially when you're talking about this level of tariffs. You're talking about 125% tariff on goods. That's not something that companies can just absorb into the profit margin. Like, a lot of these goods, they don't have 125% profit margin to absorb that. So kind of what's going on here? Well, we're seeing countries all around the world coming and saying, hey, let's negotiate. Let's do a zero tariff both ways. And I know some countries don't have tariffs. It was based on the trade deficit thing that they kind of just came up with out of the blue. But what's interesting is that, so the European Union, they were saying they were going to do retaliatory tariffs, and then they reversed and they basically said that, okay, well, how about 0 for 0 tariffs? So the whole world is coming out and they're saying, yeah, we're going to negotiate. Let's get to the table. But China's kind of saying, no, here's your tariffs. We're going to fight you. So I think that what we can take away from the 50% tariff that Trump is slapping on on China is that he's basically saying, you either come to the negotiation table or the United States will not do trade with you, period. Now, I'm not getting political here. This is just me interpreting the macroeconomics. So I think that this really puts China in a bad position because we're already seeing other Southeast Asian countries like Vietnam coming and saying, hey, let's make a deal. Let's get this working. And it's not just that China will make less money. It's that they stand to lose their supply chains that they've developed over many years with US-based companies to these Southeastern Asian countries. That's a really, really big deal for China. This needs to get resolved for both countries to move forward. So how long, because I think most of y'all don't really care about, the little politics of it or macroeconomic type things that are going on here, but how long could this last? When can the markets recover? And I think if we look to the past, we'll be able to see. So this is the president's first term. You could see that it was extremely volatile because he says, things that are very volatile. So if we look here, we can see that the first crash here, market dumped down. I believe it was like a 10% drop. And then for it to recover, it took 182 days. Okay, so the next drop that we saw, it took 202 days to get back to the highs that we had seen before the dump. And then even the COVID panic, which dumped, I believe it was like 30-something%. It still took only 191 days for the market to completely recover. So where does that put us where we are now? Well, if we come in here and we measure from the top, we come out 200 days. So basically, we're looking at August, September, beginning of September, middle of August timeframe for the market to basically have this V-shaped recovery, and this whole thing will be, behind us. And I think that's the most likely scenario because of the severity of these tariffs. His first term, he did like a 25% tariff on China. I believe that was the highest it had gotten. And now we're pushing 125%. So this either has to get resolved really, really quickly, or we're talking about a really bad situation for China and the economy. Like, this needs to be fixed. The Federal Reserve is having a closed door meeting, so they're going to be talking about this. JP Morgan came out and said, hey, we really think that the Fed needs to do an emergency rate cut before the I believe it's May 7th meeting. So we could be seeing a rate cut. Now, this was one of their normal scheduled closed door meetings that they frequently do. This wasn't an emergency meeting, but we are seeing banks and such calling for emergency rate cuts. Now, this is where it ties into crypto. So if we start seeing rate cuts and we start seeing global liquidity go up, we could very quickly see the markets begin to recover. So if we come over here and we look at so this is the net taker volume chart for Ethereum. And what you'll notice is going back to December of 2024, that the sellers are becoming increasingly exhausted. So you're seeing this divergence between the price going down, 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 and the sell pressure getting less and less and less. And so what ends up happening is this is eventually going to flip and you're going to see buy pressure. So we come over here, we look at Ethereum, we are seeing a little bit of a reversal candle here. So basically price got pushed all the way down to the 1400, looks like a little bit above 1400 level. And now price has been pushed back up. So my rule of thumb for a candle is if it closes within the upper 1/3, that means that it's a bullish reversal candle. If it closes in the lower 1/3, that means it's a bearish candle. So this is a good sign. And we do see structural support here. If you look over, you can see how it kind of supported here. But if you look over on the right side, you'll see the volume profile, how you have this low volume node. That's what caused it to come down and then right back up very quickly. There's not a lot of price acceptance within that range. So you get that little bit of a reversal. Doesn't mean that we're going to pivot here and go astronomical. It depends on several things, but this is a very good sign to see at support with the decreasing sell pressure. Now we did get a revision down. So this is the Cleveland Fed for their inflation, and this is going to tie into global liquidity because if interest rates come down, or if inflation's coming down, that gives the Fed more permission to say, okay, yeah, we're going to cut rates. And what's interesting is that the Cleveland Fed is predicting that CPI data for this, for March, which is going to come out on Thursday, is going to come in at 2.49%, and core PCE is going to come in at 2.68. And if we check the official calendar here, where is it? So the market is actually expecting, they're forecasting inflation CPI data to come in at 2.6. So the market's going to see that as an undershoot, which is going to be bullish. It's going to be a great news and give the Fed more permission to cut rates sooner, especially if we see this trade war thing not get resolved in any meaningful way by Thursday. This is just going to give the Fed more permission to cut rates, because that would mean, so the previous CPI data came in at 2.8, and so now we're going down to 2.4. So that's a big drop. And then the Fed is, the Cleveland Fed, they revised this down for April's data. This was showing 2.55 for the CPI data for April, which we'll get in May. So they revised that down quite a bit, actually. Now, coming over here to Bitcoin, and we're looking at the global liquidity index. Look, global liquidity is increasing, guys. And if you notice in the past, I know that this is scary, but if you look here at this drop that we saw back with COVID and global liquidity spiked, the market just V-shaped recovered. Okay, so we're seeing something similar. We don't have, at least in Bitcoin, we don't have that massive drop that we did back then, but we are seeing global liquidity rise, and it's breaking above the DEMA. So really the last domino to fall here is for the United States Fed, because other central banks around the world are increasing their liquidity. So the last domino to really fall, because they are the biggest player within global liquidity, is the Fed. As soon as the Fed starts increasing their liquidity, the official bull market is going to take off. And people have just, they've really ragged on Ethereum, saying, oh, it's performed so badly. Yeah, that's because we've been in a bear market for multiple years, despite Bitcoin making new highs because of the ETFs and the hype and Michael Saylor selling stock and buying billion-dollar amounts. The official bull market, the alt season that everybody's been waiting for, it never happened because global liquidity has been tightening for many years. I mean, it started tightening back in November 2021, and it's been getting tighter and tighter all the way up until now, essentially. So, I mean, once we get through this rocky patch with this trade war, this ridiculousness that's going on, right now is when the bull run is officially going. And this doesn't mean that you can't have bullish, bull runny type events happen. I mean, if you go back to 2019 here, you see that we're in a tightened liquidity area, but you saw Bitcoin skyrocket all the way up to, 14,000. You're only a few thousand off from the all-time high back then, and then it crashed back down. But that's because we were in tightened liquidity. And I was trading back here, and this was actually caused from massive short squeeze that had happened. So the fact that we're kind of moving higher, it doesn't really mean anything because it's driven by the ETFs and everything, and global liquidity had been tightening. And if anything, I think that what this does tell us is how incredible this bull run is going to be now that it is actually starting. We just have to start seeing global liquidity continuing to rise, and we'll be off to the races here. And then going back to Ethereum, I mean, you can see how quick that it will reverse. I mean, Ethereum is known for having this personality of trending sideways, chopping around, and then throughout the bear market, and then suddenly global liquidity spikes and it just has a massive rally and it catches up very, very quickly. So during this bear market that has been going on for a very, very long time, multiple years, we have seen the merge, we've seen the triple halving event happen where Ethereum is actually less inflationary than Bitcoin now because the supply of Bitcoin is increasing every year. Ethereum supply increases even less than Bitcoin. So we have a ton of pressure that has built up over multiple years. And now global liquidity is finally about to start rising. We're seeing stablecoin adoption. We're seeing tokenization, real world assets. We're seeing all these massive institutions. And the last piece of the puzzle is for the US Fed to pivot and start raising their global liquidity. And we are going to see a violent rally for Ethereum. And it's going to piss a lot of people off on crypto Twitter because many people are not in Ethereum. And when it returns, it's going to be a wonderful ride. So until next time, I'll keep you all posted with updates if anything crazy happens, but stay safe out there, stay smart, don't trade on your emotions, and until next time, I'll talk to y'all soon.